Yeah, never mind the noises of the birds and everything in the background, right? Kids playing. I'm at a farm. But I just want to share with you how you can turn your trading life around. If you've been, scammed, you've gone through a whole lot of problems, maybe you've used the wrong strategies or you've just been losing money trading forex. I want to help you to become a better forex trader. And this video, if you watch it till the end, you will come out of it better. So let's start here. There are several mistakes that people who start forex make. One of the mistakes is they open accounts with crooked brokers. Let's start there. Before I even tell you about a strategy, before I tell you how to improve your trading, I have found that when I try to help people, already they have registered with brokers that are scammers. What is a broker that is a scammer? A broker that is a scammer causes you to open accounts which it's easy for them to cheat you, like standard account instead of opening an ECN account. Some of these accounts have something called high leverage. So even if you have a better strategy or you know how to trade, still you are trading with the devil. You understand? Some of the brokers, you will find that maybe you are in a market, the market is the same for everyone. But in that broker's chart, there's a long candlestick which is not there in other charts. And it means that long candlestick can cause you to lose because that is price manipulation. So that's the first problem with young people. Or beginners in forex, they just fall into any broker. And these brokers are being advertised by your mentors. They tell you join this broker, because they want to be paid for affiliate links. Once your mentor comes with an affiliate link to you and tells you this is a good broker, already you can't trust him because that broker has bribed him with a commission. So that's the first problem with young people, trading with crooked brokers. The second problem, I know you won't like me saying this anyway, sticking to old platforms like MetaTrader 5. Maybe 90%, I don't know, 80% of traders, they like MetaTrader. MetaTrader, the problem with it is that as programmers, when we try to program boards, systems that can help you, or even when we try to teach you charts, MetaTrader is so old, it does not help us. For example, 30 minutes candlestick patterns. It's very hard it's impossible actually to easily get 30-minute candlesticks from MetaTrader. So if I'm teaching you a strategy and your MetaTrader doesn't have those candlesticks, what are we going to do? Because they're the suitable ones. Also, the language that they're using to program is something called C#. No, not C#. Sorry, they're not using C#. They're using an old language, a different language from C#. The language we are using is C# to program. So C# is more international, used by many traders, even people who are not in forex use C#. So that's the second thing. Somebody tells you, no, I was born and introduced to this platform, so I stick to it. You stick to that platform, you stick to poverty. Because like I'm telling you, it doesn't matter how many people are using it. Remember, people who are rich in life are fewer than those who are poor. So just because MetaTrader is being used by the majority or because you like it, you might as well decide to choose between liking the platform, staying there, or progressing and going to new things. It's better to move to another platform and succeed. I use CTrader, and there's a reason why I use CTrader. I'll tell you as time goes on. But it is much better. Even it has a modern feel. It looks better than MetaTrader, and has so many advantages. Also, most of these scammers, the scam brokers, they scam people through the MetaTrader. It's just that most of these people don't understand. Lastly, some of you trade the wrong instruments. Imagine you are saying, I'm losing money to forex, but you're not trading forex, you're trading gold. Gold is not a currency. Some of you are trading volatilities. Volatilities are they're controlled by a software, and that software is going to chow your money. if you continue with it. Now with gold has messed up many people's lives because gold is a commodity, it's not a currency. So it is very volatile. So now if you are poor, you are trying to come out of poverty, why would you trade something with a higher risk? You mean you are trying to increase your risk of not managing to come out of poverty because you have decided to choose an instrument that has got high risk, and you choose an instrument with high risk because you are saying it's got high reward. That high reward is meant to trap you because the bottom line is that it has high risk. So quit that instrument for some time so that you can be able to recover. Lastly, some of you, your teachers, are people who want to prove that they know a lot of things. They speak, complicated languages, terms, terminologies, volatility, pricing index, liquidity, smart money concepts, and all these very difficult things. Forex is just support and resistance. That's what it is. The fractals is support and resistance. The fair value gaps is support and resistance. You understand? The trend lines is support and resistance. Everything you ever come across in forex boils down to support and resistance. Even the wedges, something called wedges, is support and resistance. So here's my point. If you're a beginner, you don't have to adapt a difficult strategy. Hang around with these bling bling people who are trying to prove to you that they're intelligent. Many of our forex traders didn't have a strong background in academics. So when they get into forex, they take things that should be simple and they complicate them to prove to their students that they are smart. This is another problem. Today I'm going to show you a strategy that is very simple. You don't need to know a lot of terminology to know it or to trade it. A very simple strategy, and I want you to listen very attentively. From there, I'm going to show you more and even help you to practically do it with the strategy, like literally. So this strategy that I'm going to show you is just called the open range breakout. Okay, open range breakout simply means that in the morning, when the New York session opens or the Asian session opens or the London session opens, basically session open, right? The first candle that shows during that session open, the first candle, you have to make a line or to mark the high and the low of that candle. And if price passes that candle to the upside, then that day the market is going to be buying. If price goes to the downward line, and crosses the downward line, that time that that day is going to be a selling day. It's just that simple. There's nothing difficult about it. No complication, no stochastics, no complicated instruments or indicators and everything like that. Because I know you can't just understand it when I say it like this. You want me to explain. I'm going to hop into my computer and show you what I'm talking about. Now I'm using a PC, but I use a MacBook, but I have partitioned it to get a PC partition. So you are better off if you have a partition. Now I told you I use CTrader. This is CTrader. Okay, so this is how CTrader looks. This is your chart. Typically Euro USD. Okay, fine. Now, when the market opens, when the session opens, whether it's a Asian session or London session or a New York session, right? You are going to take what do you call it? You're going to take an instrument there and then you make a line, okay, on the candle of the open, the candle that forms immediately after the open session. You see, London typically opens at 8 in the morning. That candle, you mark the high and the low of the candle that forms, okay. You mark the high and the low. That's all you do. Nothing intelligent. Now, after you mark the high and the low, if price crosses that high, then the market goes up. Like you see there, it's going up. It went up because price crossed the why? Because there were many buyers that morning, or there were many buyers that afternoon, depending on the session, right? If price would have crossed down, then it would have been a sell. Simple as that. So we're going to delete this and then take another example. If you don't know how to draw lines, look carefully at how I do it. Deleting them is also very simple. Okay, let's get to the drawing of the lines. Let's take another example. An Asian Asian session. Asian session would be early in the morning. If you're in Southern Africa, that would be around 2:30, right? So what we're gonna do, we're gonna take we see that the candle of the Asian session is probably in the morning. We're gonna take something called a hairline. A hairline is that line. It's more like a cross when you move it around. It helps you to look at that to see the candle straight away, to see what time that candle formed, and then you'd be able to know that that one is an Asian session candle, especially if it has formed around 2:30, around that time. Then you know that that candle is an Asian session candle. So after you identify it with a hairline is better than a ruler, is better than your finger. So you use a hairline, right? You see where I got the hairline. So now I'm getting a cursor. Now I'm going to click a line on that candle of the open session. I click a line and then I draw that line there. You see that? I draw the line on the top and on the bottom of the candle that formed. It's just that simple. Now you do it before the candle forms. I'm just doing it now because I'm trying to show you. But you do it before you do it, sorry, immediately after the candle forms. Sorry, immediately. Not after, like now. Now the market has already moved. You see that? So I drew those two lines there around the candle of the open session of the Asian session. You see, now when price crossed that lower line there, the market went down and sold. Imagine if you had actually traded this market using this strategy. How much would you have made? Do you see that the market went down? Do you see it? Or I don't want you to be cornered. I don't want you to think of anything difficult, RSI, stochastics, Bollinger Bands. No, I don't want you to think of a lot of Ichimoku. I've heard of Ichimoku too. Those things are not necessary. Okay? You look at price. Once price crosses the bottom of the line, you enter a sell. Once price crosses the top of the line that you have made, the high or the lower line, you enter a buy. And you see, when you look at this, you realize this is just about the resistance, because that line on the top there, that's the resistance. That line on the bottom, that's the support. You know, there's nothing complicated. After all, the end of a candle and the beginning of a candle, it's about the resistance, just in case you don't know. So we're going to take another example there and see if we can get another example of such an issue. Okay, we go for the market open. If, like I said, if you are in London, the London session starts at 8 o'clock. If you're in Southern Africa, the London session starts at I think it's 10 o'clock or 10:30, somewhere there. That's the London session. The Asian session starts at 2:30 in the morning. 2:30 in the morning, right? You have to check what session, what time is yours. Now I'm checking that candle there to see if it's of a session open. Okay. The hairline that I'm using now proves that the session open is somewhere. Let me see. Let me find you something easy. Okay, let's get another Asian session. Okay, let's get another Asian session. Okay, another Asian session. Oh, I'm looking for something. Something I can show you, something easy. Okay. Right. But you could go through your chart, you could go back to the years, and you'll see this, what I'm talking about. So you can manually draw the high and the low of that candle, the high and the low of the candle. Okay, you just, okay, fine, let's get a line again on the high and the low of an open session candle. Okay, and then let's hope that we now what I want you to know is these lines are not easy to draw. The candles are not easy to locate. I struggled. I would wake up, okay, that's the candle. Okay, I would wake up and pick the wrong candle. Okay, draw the wrong candle. I would wake up late. You know, that's why I started developing robots that help me to draw these lines. And if you struggle to draw these lines or to locate that candle, there's a robot that can just draw that line. I can get you that robot for free so that you use it in your demo account and see how everything works. Don't trade anything on the real until you've been in the demo. You see, so that's the open, that's the close of the candle, that's the high, that's the low. Those are the two lines, and price has gone down. Do you see that it has gone down? Okay, I delete those lines. Yeah, so that is the open range strategy. It's a powerful strategy. It has helped me to understand Forex. It has helped me and made my life easy. I share the strategy with other people. Now, what's the difference between how I trade this strategy and how other people trade it? Because this strategy has been around for more than 20 years. The difference is I use robots to draw the lines, and I have a way that I trade the strategy. And when you are still learning and you can't do it as excellently as I can, I let a robot to help you. I send you a robot, you install the robot on your CTrader, and then the robot does it for you. But the robots that I've been creating, they also uh, trade for you. But now look at that. Look at that. There's a candle somewhere there for the open session. So I'm going to take that candle and mark it. Okay, I'm going to mark it. I'm still using a hairline to locate it. Okay, I'm using a hairline to locate that candle. Okay, then I'm going to mark it. Okay, now once I've marked it, I'm getting a line, then I mark it. Okay, I'm getting a line, then I mark it. Okay, so that candle, when it appeared, you make your high and low of that candle, right? You make your high and your low of that. You see, these things, you don't even need to be from varsity. You just need to be broke enough to want to learn. Okay, fine. Now, I made a line there. Unfortunately, it's not very clear. And then I make another line, okay? High and the low of that candle, you see. Now, you make the high and the low of that candle, then you watch price. Once price crosses that top line, it's a buy. Imagine whoever put a buy there, imagine how much money they made. Imagine how much money they made. So now when you enter into the market, maybe let's say you've used the open range strategy and the market is right, the market is going up like that. There's no need for you to quit. If the market takes 5 days going up, stay up, go with the market. Why should you come out because you want to be a day trader? Because you want to keep on coming in and out of the market. If the market is in profits and the trade is going well for you, we have robots. What these robots do, when price moves in your favor, they lock in profit. They lock in profit, right? If the market reverses, they keep your profit and they come out of the market because the market then is dangerous. But if the trade is well for you, well to do for you, you go in. Now, when you look at that chart, not with a small mind or small mentality, when you look at it with a bigger mind, look at the trade, how it goes up. Look at how it goes up. You see, you need to see the whole chart. I want you to see the whole chart so that you see. You see how that chart is. Now look at your entry. There's your entry. Now look at the top space. That top space, if it is 400 pips or whatever pips, why would you quit simply because you want to go in and out of the market? Some people, they're like one night stands. They like to go in and out of things. Instead of a relationship, they're looking for short time sex. So these kinds of people, when they come to trading, they want to go in and out of the market. They want to scalp the market. But it's better to follow that market. If that market takes 30 days, for example, 30 days moving up, stay in that trade. Stay in that trade for 30 days. You see what I'm saying? Stay in that trade. There's no need for you to keep going in and out of the market, because to get a good trade is not easy. When you get one, keep it, follow it. Even if that trade were to take a year, okay, if you have the capacity to follow it for a year, you understand. But of course, when you take a trade, you go in on a Monday, on a Friday, you typically should be out. Now let's look at the same map, the same chart, sorry, marked by the bot, because the bot can mark better than us. You see, those are the markings. When you look at the lower part, those red markings, that is an entry there. That's an orb entry. When you look at above there, that's an entry. When you look at the last one there, that's an entry. But think about this. If you entered right where there's those two red markings below, if you entered right there and your entry is right, there's no need for you to do other open range breakouts. There's no need for you to attend other sessions. You just wait until your trade takes TP. You just wait. You just wait. So this strategy is right 7 out of 10 times, and there are ways to increase it to be 8 to 9 out of 10 times. You see what I'm saying? So just find out more about where to start, how to do this, and then you do it.